Here in real estate, everything has to do with value. I've learned that this thing called price kills all. No matter how big of a problem it is, at the right price, there will be a buyer for it. We want to take advantage of opportunities whenever we can. And some of these opportunities going to make us a lot of money, and some of these opportunities going to not make us any money or lose us money. But overall, if we continue to invest, we can have an average return that is more normalized, that's more profitable. In stock investing, we call it, dollar cost averaging.
Hi, good afternoon, folks. My name is Akash Jain, and welcome to the Wealth Generational channel. Today, I have with me Tim Mai, who is a fund of fund manager as well as a pioneer in a few different areas. Tim, welcome to the show.
Thank you, Akash. Thank you for having me on the show. I'm excited.
Hey, I'm very excited to have you, Tim. For our audiences, let's get them to know you a little bit. Tell us a little story. And right out of the gate, I would also like you to talk to our audience about how you see 2025 playing out. We are almost 5 months into it, 4 to 5 months into it. We still have about a majority of it, 8 months going into it. What do you see? How will 2025 play out? But before you get into that, let us tell your audience your story, what you do, what keeps you up at night, and what helps you sleep at night.
Yeah, sounds good. Yeah, I mean, obviously, I've been in business for a long time now, so it's a long story. However, I'll make a shorter version of it. If you ever heard of the term Vietnamese boat people, I'm one of those. What it means is it's a group of Vietnamese immigrants that after the war ended 1975, escaped out of the country, got to a refugee camp, and then eventually made it to one of the countries like the US or Canada or Australia. I came here to the US with my older brother. When we escaped out of Vietnam, he was 18, I was 11 years old. We spent a year in the refugee camps. And then so when we made it here to Houston, Texas, I was 12, he was 19. Two boys on the street, no parents, because our parents couldn't make it out. We had the teenage dream life, right? To be able to do whatever we wanted to do without any parental control. So we did a lot of stupid stuff. I was going to school. My brother was going to work, finding whatever ways he can to earn money for the two of us. And we live in this apartment that at any given time, we were housing 8 to 12 other single like boys living there. A lot of them were runaway kids. A lot of them are just like, the kind of kids that rather be in jail than out of jail because at least they'll get fed. It was a very interesting time. I was able to get out of that environment, finish high school. During college, I got recruited by an IT company and moved to Richardson, Texas, which is in the DFW area, and worked there. This is during the dot-com days. And as you all know, what happened with the dot-com boom came the dot-com bust. And I got laid off from my IT job, moved back to Houston. I thought that what I used to think as job security, corporate America, job security, was it, right? It's, my parents want us to be able to come to America, get well educated, find good jobs, and here we are. But I got laid off. And so that whole idea of job security no longer was true for me. So I was like, okay, if I'm going to get laid off working for corporate America, a big company, I might as well take a risk on myself. So I started learning about entrepreneurship. One of the very first books I read was Rich Dad Poor Dad, Robert Kiyosaki. Another book was from Robert Allen, Nothing Down, which is teaches about how to buy real estate with no money down because I didn't have any money. And I started in real estate investing, started with single family homes. And I've been in the real estate space now 23 years. That was 2002. Yeah, so that's career outside of the IT career. It has been in real estate. And 3 years ago now, I met a gentleman that we later became friends. Something that he said that really stuck with me because I was doing a lot of fix and flip at this time. And he's like, yeah, Tim, I used to do fix and flips too. But these days, each deal that I do adds at least $1 million to my net worth. And when I heard that, I was like, wow, like I don't make anywhere near that kind of money doing these smaller fix and flip deals. So I started to learn more about what he does. He does multifamily, commercial real estate syndications. And so, yeah, so I decided to get out of the single family home business and got over here to the multifamily side of the business. I've been absolutely loving it in so many different ways. I think it's a lot better than the single family home landlording, fix and flip type of business. And to answer your question about, what I see in 2025. So since I got started in real estate in 2002, so I've been through that 2008 market crash. I lost over $3 million dollars in that market crash. So when 2009, 2010, 11, I was so deep in trying to fix all the problems I have. I had 30 houses in different stages of construction, and overnight there were no buyers for them. So I had to I was bogged down trying to solve all of that problems and figure out what house I'm gonna let go to foreclosure, which one I'm gonna turn into rentals and things like that. And as if any of you been in real estate long enough, the market started picking up in 2010, 11, and then 2012 really started to come back strong, right? And I didn't get to take advantage of any of that because I was so busy trying to solve my own problems. And now, looking back in this market that we're in right now, this market, even though it's not identical to that market, to that last market crash, I feel like we are in that 2009 time. We're not completely out of it yet, right? We're not completely out of it, but I think this is an amazing opportunity. In hindsight, if I can redo it again in 2009, I would have bought as many as I could get my hands on. I would not worry so much about trying to maintain what I have, but still look for ways to grow, right? Just everything about this market feels very much like that 2009 market to me.
That is a very interesting perspective, Tim. However, help me understand for our viewers, right? Hey, yesterday or this week there was the Fed meeting, and the Fed did not drop the interest rates. And in today's market, also, yes, we might have be seeing some good deals coming through from a basis perspective,
Yep.
but the interest rates are still high.
Right.
How do you make deals work? Hey, the
Yeah.
fundamentals is to have low interest rates. How do you make deals work?
Right.
What are
Yeah.
you guys doing?
Yeah. I mean, I love looking back in the market to study how to navigate this market, right? In 2009, real estate were upside down. I mean, I remember some of the people that I met back then that was in multifamily, they were buying multifamily assets using hard money lenders at 14% interest. How were they able to do that? Well, owners lost all of their equity, take a loss on their interest as well. And so we're starting to see that right now that some owners have either done capital calls to try and inject money into the deal or somehow negotiate with the banks. But if not, they're losing all of their equity. The banks are taking it back. Yeah, so once the bank takes it back, they're gonna want it off their books. They don't want it on that on their book limits their ability to loan out more money. So they're gonna want it off their books and they're gonna have to take a discount at some point. And so, here in real estate, everything has to do with value, right? It's like I've learned that there's a thing called price cures all. So no matter how big of a problem it is, at the right price, there will be a buyer for it. Well, how we can find good deals is that some existing owners going to lose their equity, their property. Some of these banks are going to have to take a loss to allow for a lower price based on whatever the current interest rate is. And so if the interest rate doesn't get lowered soon enough, at some point they're going to give up trying to hold on to these and go ahead and start the foreclosure proceeding.
Got it. So you're basically saying, hey, it's a basis play rather than an interest rate play. And if you can get it for a good basis, hey, you will take the risk of a little bit of a higher interest rate.
Yeah, exactly.
Got it. So help me understand also, right? Hey, so again, our viewers are people who are working their day jobs and they have enough, hey, saved up that they want to earn a lot more returns on their money. How can we comfort our viewers? There is people who are losing their equity. How can we comfort our viewers that, hey, the deals that you're seeing these days are going to give them much better returns than some of the people who are losing their equity?
Yeah, for sure. You have been investing in some of your deals, like not paying anything or possibly losing. That's unfortunate. I'm sorry. It is an investment. We want to take advantage of opportunities whenever we can. And some of these opportunities going to make us a lot of money, and some of these opportunities going to not make us any money or lose us money. But overall, if we continue to invest, we can have an average return that is more normalized, that's more profitable. In stock investing, we call it, dollar cost averaging. So in a way, what we do here in real estate is something similar to that. There's definitely been a whole lot more wins than losses in real estate for most people, for sure. Now, if you're brand new to investing, you got it lucky because the people who didn't invest in, especially in the assets that was in 2021 and 2022, when we had the interest rate hike that happened and nobody really knew how to navigate through that market at the height of the market. And then you have this interest rate hike. So if you didn't invest in 2021 and 2022, well, most assets are at least stable right now. And most of them, I'm not saying all of them, obviously, but most of them should be okay. And so if you are new, you got lucky that you didn't have money into assets that were purchased in 21, 22 at the height of the market. And now you're investing in to what I think is pretty close to the bottom, if not already bottom. And so the upside potential from here on out is much, much greater than if you were an investor, 3 years ago.
Got it. That's a great perspective to look at dollar cost averaging, plus the fact that hey, we are buying at the almost at the bottom of the market. Based on obviously, hey, you and I have met each other several times, and knowing some of your background that hey, you are a pioneer in the fund of fund industry. Help our viewers also understand as to hey, what is fund of funds, and
Right.
why should they maybe invest in a fund of funds vis-a-vis a syndication or a direct fund with an operator itself.
Definitely great question. The way it works, I'm going to give you a simplified view of how fund of funds work. When you invest into a deal, let's say if you can invest $100,000 into a deal, and let's assume that the deal pays out an 8-pref, a 70-30 split. Let's just use that as an example, okay? A fund like myself will come in at a much higher dollar amount. A lot of time, at least a million or a lot of time 2 million or more. Instead of getting an 8-pref 70-30 split, we might get a 9-pref or a 10-pref and 90-10 split, right? Because we're bringing a bigger dollar amount into the deal, we get much better economics from the deal, which allows us to give back some of that, better economic to our passive investors, our LPs. So what your return comes out at an absolute minimum. Every fund manager does things a little bit differently, but at an absolute minimum, you are going to get at least the same return as if you invest directly into the deal. And oftentimes, you get a even better return if you invest it directly into the deal because the fund manager has that profit margin, that better economics to be able to share some of that with you. And then in addition to that, that's on the return side of things. But what I think is even more critical, the benefit that you get as fund managers like myself, I'm very well connected in the marketplace. I know which operator is doing well, which one's not doing well, which ones are having capital calls, having foreclosures, because I invest my own money into these deals as well. So I get to hear it from, being an LP in some of these operators myself. I get to hear it, from just industry knowledge, like insiders knowledge of what's going on with these operators. And so, I do my best, my team and I do our best to source the best operators that are well capitalized. Even if they have an asset that's struggling, they know how to navigate through it to minimize, loss. In addition to sourcing the best operators, we also get to cherry pick from the best deals that these operators have. So we don't invest in every deals with every operators. We cherry pick through, only the people that we know that we ourselves would consider investing our own money into these deals. And a lot of fund managers invest right alongside with our investors. So you get that benefit of the fund manager working on your behalf without any cost to you and with their, industry knowledge, with their experience. That's a great, great benefit for you. In addition to that, just so you know, as a fund manager myself, because I invest into deals as well, when I'm invest as a fund manager and as an LP, my returns get greater. So that's one of my other benefits for being a fund manager and sourcing capital from our passive investors is because collectively as a group, we can all win together.
That's an amazing strategy, Tim. Again, I think you have the power of negotiation, you have the power of
Yep.
larger checks, you're able to negotiate better carries, better returns, better prefs, and that is a reason why investors would want to come with you. That's a great story. Now, help me also understand, hey, my fund, what we do is we invest in multiple different asset classes.
Hmm.
We not only invest in multifamily or other real estate asset classes, but we also invest in oil and gas, we invest in startups, so on and so forth.
Right.
Help me understand, hey, how is your strategy different or similar, and what are the different areas that you typically invest in?
Gotcha. Yeah. So in terms of my fund, we only invest in real estate. We don't invest in anything outside of real estate because it's an area of expertise that I have a lot of experience in with my 23 years of experience. Now, me on a personal level, I do invest in startup, especially prop tech. So real estate related technology, invest in those. I do have some money in crypto as well. I got started in Bitcoin when it was only 600 something dollars a coin. So so I do have some money there. Those are the main of my investment. I haven't gotten into oil and gas and some other alternative assets yet.
That's great to know. Another question, Tim. I know, hey, you've done a lot of work. I know you come from a technology background, and I've also seen you on stage talking about AI. Talk to our viewers about your take on AI, how it's going to change the future, especially in investing.
Yeah, oh my gosh. AI is going to change the future in so many ways, right? And in a way, I kind of relate AI with the internet. Look at how much the internet has changed everything about how we live and work and things, right? To me, AI is a resource, a tool, very similar to the way the internet was a resource, a tool for us. If you think about the evolution of the internet, when the internet first came out, Yahoo was like the big dog because they provided, there's a bunch of independent website and Yahoo provided a directory for us to know and browse through like, website we should go to. And then Google came along and says, well, I don't want to just give you a directory. Why don't I just do the research for you and give a search result, right? And then now OpenAI came along and says, well, I'm not going to just do the research and you having to look through all these research. How about if I just give you the answers? And then now there's another tool called Menace.im. They, instead of saying, hey, let me give you the answers, I'll give you the answers and I would just do it for you. So it's called AI agent, directory search, AI chatbot, and now AI agents. And of course, there's going to be autonomous here pretty soon. So AI is going to change us in so many ways. I have a 3D printer. And usually when you have a 3D printer, you would have to learn how to do 3D modeling, and you have to use these 3D modeling software or AutoCAD type software. Last night, I just got ChatGPT created the model for me. Like I just give it the description of what I want, and it created it for me. And so AI at this point is able to help us. It's like a super level assistant that can do a lot of things that our human assistant can't do for us. And it can do everything from like this, 3D modeling to creating your websites to, all kinds of automations that you're able to do. And I'm sure this is going to come out very soon. As an LP investor, we hear the pitch, we see the pitch deck, we can feed it into an AI, like a custom chat GPT, and it can tell us, okay, here's where I think, you should look at. Here are the red flags I'm hearing from the sponsors. And it's probably going to have data where it's like, oh, they're expecting a 3% rent increase, but based on my data, I think only a 2% is reasonable. As an investor, I think those things are coming, and I think it's getting very, very close to being able to give us that kind of intelligence and just bringing in everything that we used to have to source independently, and you have to pay a lot of money for independently, that bring it all together, almost like what Zillow did with Zestimate. The new AI is going to do that for us with these, investment opportunities that we're going to have.
Very cool. So, hey, are you using AI to help you figure out which deals you should invest in? Are you using some of the tools?
We're using it to help us with underwriting right now. but it's still limited right now because it doesn't have all of that third party data. Right now, we can only feed it the underwriting model from the operators that we're investing in. We're able to, no matter who we're investing with and what their model looks like, we're able to unify it so that we're able to read the data better and be able to ask the questions that we need to ask. But so right now, it's more of a really good sort of data unifying tool to make our underwriting a lot faster, less mistakes. But yeah, I think very soon, I wouldn't be surprised if a year from now, it's able to give us much more intelligence information, such as rent growth, such as comps in the areas and things like that.
Very cool, Tim. Hey, thanks a lot. Now, Tim, hey, we already had about 30, almost about 30 minutes of our conversations, and I didn't even realize we had 30 minutes. I was having so much fun listening to you. Hey, any parting thoughts for our viewers?
This is an amazing opportunity that we all are in right now. This is where the next generation of wealth is going to be made starting right now in this market. And so, yes, you might hear a lot of negative news out there, a lot of people losing money, very similar to what happened to me in 2008, 2009. Been through that market. I know better now how to navigate through this. And I would recommend the same thing for you. It's like, this is the time you can consider those media news, but don't let them stop you from investing now. That's what I would have to say.
I would concur with your assessment of the market at the current moment. I think it's almost bottoming out. Right now is a great time to buy, a great time to invest. Thank you, Tim, for being on our show today. I really appreciate you joining us. Thanks a lot. Take care. Bye.
Thank you. Thank you. Thanks for having me on. Bye.